Hey, welcome everybody. This is the Options Moneymaker Q&A session. It is August 26th. I'm Mark Dannenberg. Aaron Rumley and Michael Kastner are with me tonight. We're going to hear from them as we get into some questions. If you're brand new to this Q&A, I want to just kind of give you an idea of what we intend for this Q&A and the time that we spend together. So we have a very grounded core philosophy that those of you who have a desire to trade, to build what we refer to as a trading business, and to generate ongoing income from your trading, that you need to first of all learn to trade. And then you work to trade to earn. So our role here is to help you learn how to trade and then help you and guide you through the process of trading to earn. Now we do that with the adaptive entry system, which we profile here on behalf of New Cycle Trading and Analytics. It is a very powerful and accurate system for identifying trends, and it allows you to really strongly position yourself to have optimum entries for your trades. We also use tools like the Profit Sweet Spot Matrix, which we've been tracking historical data since January 2019 on performance of the Cycle Finder Plus on a daily chart. When the Cycle Finder Plus on a daily chart has a cross to the upside or to the downside, Aaron helps our members in the live trading room identify that and identify that we would be buying to open a call or buying to open a put on the stocks or indexes in our watch list. The live trading room is actually alive and active throughout the entire trading day. We actually open the live trading room at 8:45 a.m. Eastern, so that's 45 minutes before the regular market session. And we devote the first few minutes of that session doing a review of our watch list of stocks and indexes. So Aaron leads us through that, identifying which stocks may end up having a daily Cycle Finder Plus cross, which ones may be having held a position from a prior day, and then helping at market open identify which of those trades are ripe for an opportunity to take a position. We provide the Profit Builder Plus education program, which is all oriented around options education. If you're a brand new options trader, you've never traded options before, that's the place you want to start. We literally start from what is an option, what is a strike, what is an expiration, etc., and take you all the way through some advanced spreads. We also have a futures trading education course, something we just updated here about a month ago. And it's really designed for people who want to learn how to successfully trade futures. Futures can be a very risky vehicle, but it doesn't need to be. We walk you through how to control that risk, how to guide yourself through your trading, and futures trading is what we primarily focus on in the live trading room, although any signal on the adaptive entry system that we call out in the live trading room can be traded as a futures trade or an options trade. We also do some one-on-one coaching. I do a limited amount of one-on-one coaching, but it's really designed for a very intensive, what I call an immersion into learning how to trade. The structure of one-on-one coaching is generally one session a week. Each session is about an hour, and it can be to cover whatever you choose to cover. We'll design a curriculum together, but if that's something you're interested in, you can certainly reach out to me and we can have a conversation about whether or not that's right for you and whether or not there is capacity for taking on additional coaching. And then we also represent in all training and education, New Cycle Trading and Analytics for the adaptive entry system. And on the New Cycle Trading website, there is a traders forum. It's at traders.newcycletrading.com. And so if you have a question, you want to post a comment, you have an opinion about something going on in the market, you want to chat with other traders, that's an area that you can do that. And here real quick before we get into questions, I just want to share with you the highlights of what we track on the adaptive entry system. Now those of you who are in the live trading room or maybe have followed along with my end of day recordings that are posted on the New Cycle Trading website. You'll be very familiar with this, but what we're doing is we are helping our traders understand not only how to properly use the adaptive entry system in identifying trades, but at the end of every day, how to properly calculate what your profit or loss was and enter that into a personal trading plan, which will help you forecast for 12 months what your potential income could be from trading. It's a very powerful tool, yet it's very simple. The concept is if you have good days and bad days, and you don't have some way of keeping track of what your overall run rate is, you'll kind of lose sight of what your goal is, you'll lose sight of where you are, how are you doing, and it's kind of a mishmash of, I don't really know where I stand. So we go through this process every single day, and there are two primary categories that I track that I enter into a personal trading plan, and they have a couple of differences to them. First one is all of the signals on the adaptive entry system being traded between 9:30 and 12 o'clock Eastern. Well, to date, so far, where we started doing this, we started profiling this process on July 6th of this year. So since July 6th through August 26th, that 9:30 to 12 category, trading the NASDAQ 100 futures at $20 per point is averaging just under 25 points per day. So that's just under $500 a day average profit if you're trading one contract. When we plug those numbers into the personal trading plan, and you can see this process any day through my end of day reviews, but when we plug those numbers into the personal trading plan and we look out 12 months, having used the personal trading plan to scale up the number of contracts we're trading, it is a forecast of about a $280,000 income. And that's starting with a $5,000 account. The other category we track is a more intensive amount of time committed to trading during the day. And it's looking at any trade that occurs between 7 a.m. Eastern and 4 p.m. Eastern. And it is only focused on the trend, bias, and continuation signals. So the other category is all signals, any and all signals that are part of the adaptive entry system. And in this case, it is only two of the signals that the adaptive entry system presents to us. And so in the 7 a.m. to 4 p.m. for more involved and intensive traders, that point average on NASDAQ 100 futures is 36.83 points per day. And at $20 a point, that's an average of about $736 per day trading a single contract. Personal trading plan, when we enter the data in the personal trading plan at the end of every day and adjust our forecast for the remaining 12 months and base that forecast on what our actual run rate is of profits and losses, the forecast for 12 months is $381,895. So those numbers will continue to change, and as I say in the end of the day review, it's important to change those numbers every day, to modify them, to tweak them. The further into your 12-month process you get, the more, or the least, sorry, the less likely it is that you have to constantly adjust those numbers. The idea up front is to establish what your run rate is, which is a blended mix between wins and losses, and then forecast out the remainder of your 12 months based on that run rate. And if that run rate improves, you can improve your forecast. If that run rate decreases, you can decrease your forecast. And these 12-month forecasts, they actually can be influenced directly by you, not just through your trading, but you can tweak and massage and adjust the total number of contracts that you're willing to max out at, and you can certainly increase potentially your income for a year, or you could be ultra conservative and you could decrease the number of contracts. So we're going to go ahead and take questions. I'm going to just leave this on the screen here for a minute. If you're not familiar with the adaptive entry system, which is the latest generation of technical signals, markup metrics from New Cycle Trading, you can check it out at optionsmoneymaker.com/TBP, which stands for Trading Business Plan. we've incorporated the adaptive entry system into an overall perspective of a trading business plan, viewing each of you as small business owners of your trading business and providing for you the tools necessary to be successful in your business. And then the daily end-of-day reviews that I was talking about, you can view those at newcycletrading.com/trade-results. Just go to the New Cycle Trading website and you'll be able to see the results and listen to the overall end-of-day review performance. All right, this time is really devoted to you. It's designed to have myself and Aaron and Michael be available to answer questions. We do this twice a month. We assume, I particularly assume, that if you're going through the process of learning, that you will have some questions. And there might not be an easy way for you to ask that question, short of sending an email and trying to explain it in email and here. Although you are in chat, we can have a little bit more interactive session where we could help guide your understanding. So we are available to answer whatever questions that you may have.
Jeff's asking, is there a setting for the AES that will alert on a continuation trade? If so, how do you set it up?
Jeff, that is in the works right now. I'm going to talk to Craig about that in the next few days. There will be a signal that will be labeled T+. That's the continuation trade where it's identifying the Cycle Finder Plus cross. But for now, you just have to monitor the Cycle Finder Plus. Once we are confident that that's all nailed down, we will put out a release of the AES that will include that.
Okay, can I listen to the live trading room on my cell phone?
Yes, you can. There's a phone-in number. So when you register for the live trading room, you receive the registration link via email, and there's an option on there to phone in to the live trading room. You can also, depending if you're not driving or anything, you can also download the Zoom app to your phone as well and log in through the app. But if you're just looking to listen, yes, you can join via phone.
What does the AES software cost per month? Steve's asking.
Steve, the adaptive entry system software is $597 a month, and in the first month we give you a $300 rebate, and then ongoing it's $597 a month. We worked with New Cycle Trading regarding the price to make it reasonable to compensate for the amount of time and effort that went into building it, creating it, but also as you see when I shared the averages in these categories, if you were to trade 9:30 to noon, if you did end up averaging what we've shown the average to be, you can easily pay for that in a day or two, depending on what strategies you're trading. So we try to price it to be reasonable and appropriate for New Cycle Trading, and also to allow any trader to have it part of their trading business and be able to easily have a return on their investment pretty quickly each month.
Kenneth is asking, during the live trading room this morning, there was much discussion about fractals. What are they and why are they important to identify?
Yeah, so Kenneth, in addition to the primary signals that are part of the adaptive entry system, there are fractals, and they're identified on the chart by a red V or an inverted green V. So when you have a red V, it's referred to as a lower fractal. We have a inverted green V, it's referred to as an upper fractal. So a fractal, this is a very clear one to see right here. A fractal is the center bar of a 5-bar sequence where that center bar has a higher high than the 2 preceding bars or the 2 bars that follow it. So it's the highest high in a 5-bar sequence that is the middle bar. Same thing holds true with a lower fractal. The lower fractal is a fractal. It's the center bar where the 2 prior bars have higher lows and the 2 bars that follow it have higher lows. And the reason it's significant to us, and the reason we talk about it in the live trading room, is because there is a lot of integrity in terms of the historical performance of fractals, where there's a high probability that when the price breaks above an upper fractal, that the price is likely to continue moving higher. No guarantee of that, but there's an increasing probability that the price is going to continue to move higher. When the price breaks below a lower fractal, there's an increasing probability that the price is going to continue to move lower. So in addition to the adaptive entry system, we have fractals embedded on our charts, and we have several people in the live trading room that like to trade the fractals. So that's why we talk about them.
Gary's asking, I just started going live this week and started using the personal trading plan. I have a question on the D and E cells in the top left averages. So I think you might be talking about the ones that Mark has mentioned I've added to his spreadsheet just in the past week or so. So they're not available yet on the trading plan. Mark wanted those numbers available to benefit you all in the live trading room and during his reviews of the performance for each day. So it's something that I put on his chart for him. But we are in a discussion to look to roll that out potentially to add it to a future update of the trading plan.
What is the significance of CycleFinder Plus and AO in the strategy column of your transaction record? David's asking.
Yeah, right now, David, there's no significance to it, but it is something that we have traded in the past that was part of the original profit flow analytics system that preceded the adaptive entry system. And I am using this tool that you see every day at the end of the trading day to track a variety of things. And we're not doing anything with that data yet, but right now I'm just tracking CycleFinder Plus crosses that are aligned with the AO. And eventually, with Aaron's help, we'll tabulate that data and see whether or not it has significance and where it falls in relationship to the other signals. So when we look at the averages, we have several categories that are being researched right now. Aaron's finishing some research on another particular category, which we'll be talking about once she's done. I'm gathering some data on yet another category, but we're always in a state of identifying patterns that we think might be beneficial to all of you. And so at the end of the day, we're going to look at any new patterns that might be in the process of being researched or haven't even hit the research category yet, but we're starting to gather data. We'll look at those and we're going to stack rank the performance of everything that we've tracked and share with you where the optimum level of trading is. So we have an initial view of that right now. You actually see that in the yellow highlighted bars here. And what it's done is it's taken 3 categories, and this is just a very preliminary assessment, and we're in discussions about if there's other things that we might need to add to that assessment. But initially, what we're doing is we're stack ranking the number of negative days, so the number of losing days in each category. Now we're excluding anything that starts at 3 a.m. In the morning, nobody's going to be trading from 3 to 4. That's more for down the road when we talk about auto trading. So we're really starting at 7 a.m. So any category that has a start time of 7 a.m. or later, we're stack ranking the performance of the negative days. So we know which category has the lowest number of negative days. In the 53 days that we've accumulated so far, which is about 10 weeks, 10 and a half weeks of trading, we've only had 2 losing days. Now, one of them was pretty significant, but still, it's only 2 losing days. So we stack rank that. Next thing we're stack ranking is points. So everything is presented an average number of points, and this is all based on the NASDAQ 100 futures at $20 a point. And then the third thing that we're stack ranking is the win-loss ratio. Win-loss ratio is a very important number, especially in my mind. If I have a high producing category, now this, I'm going to use this as an example even though it starts at 3 a.m. I have a high producing category that's producing 73 points a day at $20 a point, but it's only got a 38% win-loss ratio. It means that you are really muscling your way through a lot of losing trades, and that's an emotional drain. It just wears on you after a while, but what you're doing is you're trying to work your way through to the trades that give you the big wins. Yeah, I'm not sure that that's the right thing for everybody. You might choose to do that, but I'm presenting the data so that you have that choice. Anyway, what we do then is we add up the 3 categories and we take the lowest value and we zero in on that as what we consider to be our #1 ranking in terms of optimum performance. In this case, it happens to be trading all signals, all of the signals that are presented by the adaptive entry system between 7 a.m. and 4 p.m. And it averages about 80.5 points a day at $20 a point. There have only been 2 losing days, and the win-loss ratio overall is 72.8%. So it's not #1 in all categories. It is in negative days and point production, but it is 4th in win-loss. But the win-loss differentiation is so close. They're all in the low to mid 70% range that clearly, in my opinion, the way I'm interpreting it, if somebody wanted to say, how do I optimize my time of trading, and I don't mind trading from 7 to 4, that's where you would focus your attention. 2 of the categories that we track, which I already shared with you, are tied for 2nd in terms of ranking, and that's the 9:30 to noon, producing just under 25 points a day, and the 7 to 4 trend bias and continuation trades at just under 37 points a day. So this category, the CF plus / AO, is really just very, very preliminary, kind of gathering some data, and then we'll include that in an analysis later on down the road.
And it's not included in all currently. So we have the spreadsheet set up to pick exactly what we want included in the all category. So that's not currently being included in the all category.
That's correct. I'm also tracking performance of fractals, and Erin's doing some additional research on that. You'll see those coded as F on here. Those aren't included in anything yet either. But having the data here will allow us at some point to extrapolate the data and do an evaluation and see where that category ranks compared to the other categories, or in the case of fractals, is it a category that you could say, I'm going to add to another category? So we're building a tremendous amount of flexibility, but what allows us to confidently make decisions about our trading, where to focus our time, where to focus our attention in terms of signals, is having the data. And the more data we have, the more concrete those choices will be for us.
Steve's asking, is the consensus trade the most conservative trade?
I don't think that the consensus, I wouldn't categorize consensus as the most conservative. I think that they all have a reasonably similar degree of risk. If I was going to start somewhere and wanted to focus on just one signal, I already shared with you that taking all the signals from 7 to 4 is the optimum performance, but that might be a little overwhelming for you at first. If you want to start somewhere, I would follow the trend. And so the trend signal is the T label, or if you don't even have the label on there, it's the second blue bar in a new sequence, or it's the second red bar in a new sequence. So red, you're going to go short, blue, you're going to go long. That's where I would start and then blend in the other signals as you feel more confident with your trading.
Lou is asking, are there setting adjustments recommended for applying AES and after hours trading from 6 p.m. to 10 p.m. Eastern?
There aren't specific settings for time of day, no. And to be fair, Lou, all of the research that we've done so far has started at 3 a.m. There's a correlation there to the European markets opening. There can be some really great activity after hours between 6 and 10 Eastern, but we don't have anything that specifically is a unique setting for that time frame. So, for example, there was a signal here at 7:12. Sorry, I'm on a 3-minute chart. There was a signal back here at 6:35 to go short, and there was a little bit of a drawdown on it, but you're in at 968.25, and so far the trend is still continuing short, but there's been almost 10 points of profit out of that. Easily lock in 5 points, but so far 10 points, which is $200 on a single contract. But the simple answer to your question is we don't have specific settings for times of day.
Milo's asking, would you please share what the results are for the Trend Bias Plus and the consensus for 9:30 to 4?
9:30 to 4. I don't think I have that.
We can't combine them together right now. That'll just take a little bit of time, but we can do the Trend Bias plus 10. And we can change that from 9:30 to 4. Oh, it does have trend. Never mind, we
Well,
do already have that
well,
on there, I guess.
Yeah, but I'm gonna give you an answer, Milo, but I want to qualify it and say you can see it's in the researching category. So that means Aaron and I really need to go through it and make sure that that we have good data. But you asked from 9:30 to 4. If I change this from to 9:30.
Yeah, I'm not entirely sure that's actually trend bias and consensus, but
Yeah, all right.
like Mark said, we'd have to, where it's a research stage.
Yeah, so if that was correct, and I don't want to leave you the impression that it is, because I have this labeled as researching, it's like 39 points a day. If it was just trend bias, and you wanted to look at trend bias from 9:30 to 4, you can do that. It's just under 26 points a day. You got 7 losing days out of 53. Overall win rate on trades is almost 76%.
Kenneth is asking, on several occasions during the live trading room this morning, Michael says, okay, there are 60 seconds left. What is that all about?
So, Kenneth, we're trading a 5-minute chart. Trading a 5-minute chart. And we have a countdown clock right here. Market's open right now. You can see this countdown clock. It's 36, 35, 34. That's seconds. That's the number of seconds that remain until the next 5-minute bar opens. So Michael and I are monitoring the market, and we just try to give an alert out to the live trading room community that, hey, we've got 15 seconds now before the next bar opens. So that's what we're doing. And then also there's a feature that New Cycle Trading built in called the wake up alarm. And that actually alerts us 30 minutes, not 30 minutes, it alerts us 30 seconds before the open of the next 5-minute bar. And that is very helpful if we're answering questions, or if we're responding to an email, or we're in a chat somewhere, something that's distracted us away from looking at the chart, that gives us a wake up, say, hey, now's the time that you want to pay attention to your chart. You got 30 seconds before the next bar opens. And since all of our decisions really are based on the opening of a new bar, it's important that we pay attention to that transition.
Paul's asking, can you please explain the concept of the profit sweet spot in relation to option trading, placing, and exiting? So the profit sweet spot matrix is at its core an Excel spreadsheet that has historical data on it and allows you to do research based on what you want to trade, whether it's intraday or whether it's daily, but it allows you to go ahead and do your own tracking on the profit sweet spot matrix. So for example, what I call out every morning is based on just one trade a day per entry or per symbol. So we've done research on the stocks and indexes of our watch list, and each morning we look to see if one of those are going to have the Cycle Finder Plus crossed on the daily chart, and then based on that research, it tells us what our exit point is. So on the profit sweet spot matrix, you enter what your how many contracts you have, your option price, your option delta that you chose to open. It'll calculate your profit target based on your desired win rate and the current sweet spot for that stock. And then it tells you where to set your closing order at, your GTC. And so that is done basically every day right around 9:30. And then we come back to it the next day at 9:30 to reevaluate. If you're looking to take advantage of the intraday entries that Mark and Michael are calling out throughout the market day, but you want to do that on options instead, you can still do that. What you're going to want to do is still use the profit sweet spot matrix to help you identify your sweet spot, or you can listen in on the room, and when Mark says that he's locking in 5 points or that it's hit their 10-point target, you can evaluate your option position and consider closing it at that time, because they are locking in profit or exiting their trades at that time. So for example, if they're calling out entries on NQ and you're taking options trades on the Qs, you can enter when they enter a trade and then evaluate your position and look to close when they're exiting their trade. Otherwise, I would encourage you to use the profit sweet spot matrix, the intraday options templates, and do your research to calculate what your sweet spot is for the style of trading that you're doing. And it will help you identify at what point you should exit your position based on the calculated sweet spot and your desired win rate.
John's asking, do you call out all trades in the live trading room? During the 2-week introduction, it seemed you concentrated more on the momentum trades.
We do call out every signal, and I know that during the 2-week trial, 2-week introduction, we called out every signal. There was no focus just on momentum trades, because the momentum trades are just part of the whole package, part of the whole system. So you've got trend bias trades that are telling you where the trend is starting. Then you've got a momentum signal, which may tell you there might be a little bit of a reversal here in the opposite direction. Then you've got continuation signals. So it's just one signal that's part of the entire set. But no, we identify all signals. And when I say identify, I mean, Michael and I together try to do the best job we can to actually call out every signal that we see. But the reality is we're showing the charts, and once you become familiar with the system, even if you don't have your own chart, you can see when the signal comes on. So it's really easy for you to follow, even if we happen to have stepped away or have not noticed a signal that came on. But we try to call out every one of them as best we can.
It may have felt like we were focusing more on momentum trades just because we try to be clear when a momentum trade comes on. If we're in a trend or a consensus trade, we don't ditch the trend to go into a momentum trade. So there's a little bit more of a conversation around momentum signals. But Mark's right. We're identifying all of them.
TJ's asking, are your straddles still working?
So we haven't traded straddles for a while. We actually transitioned to straddles when the market was first selling off, and we were not sure where we were headed, how fast we were headed in that direction. And the straddles were working very well there for us for a while. So here's my personal bias. We are trading primarily futures right now. And there's another question out here that I'll tie to this. TJ is asking, is there more profit potential on options or futures? Well, I think the potential is equal on both. But the thing about the futures is at the end of every day, you're flat. There is no overnight hold. Well, I mean, you can hold overnight, but it is super expensive, and we recommend you don't do that. There's no overnight hold. So with options, if you hold overnight, there's always the risk of a unexpected news story or something to come out that's going to either positively or negatively affect your position. So options can be an outstanding method for generating consistent profits, but there's also that element of the overnight unexpected move in one strong direction or the other. With futures, we are focused on a 5-minute chart. We're willing to trade throughout the day, and we're taking the signals as they're presented, but at the end of the day, we don't hold anything. So if tomorrow morning I wake up and realize that, geez, the market's down, NASDAQ's down 300 points, it doesn't really matter to me, because when I start trading, I'm going to insert myself at wherever the current price level is. So if the market continues to move lower, well, I'm going to take advantage of that through these signals. If it reverses and heads higher, I'm going to take advantage of that through these signals. So we've kind of gravitated to, for the time being, futures. One of the things that we talked about a couple of weeks ago in a Q&A, Michael was showing a fib retracement pattern on the NASDAQ 100, the daily chart. At some point in time, there's going to be a retracement, and it could potentially be fairly sizable. And then after that, we could have a sizable reversal back higher and take out the high again. So that could, I'm just saying could, in a lot of what I'm telling you here, that could actually create somewhat of a similar situation that we had that started at the end of February. And so I've decided to stay focused on futures. And one of the reasons is because of the personal trading plan that we developed. We can see what the potential income is. And it's a matter of producing, say, 35 points a day of profit on a winning day. And on our losing days, which we plan for, maybe having no more than 17 points a day losing. So we plan all of that, and we can it feels like we have more control over our outcome over a 12-month period, given the current state of the market. So that's kind of a long-winded answer for you, but I think that trading futures right now is an advantage. Trading options, if you're trading intraday, can be traded exactly the same way. It's primarily the overnight hold. You have that euphoric feeling when you wake up and realize that you were holding an Amazon option and Amazon's up, you're holding an Amazon call and Amazon's up 200 points. Well, that feels really good. It doesn't feel good if you're holding a call and Amazon's down 200 points. We don't have that emotional roller coaster with futures. We follow the signals. At the end of the day, we plug our performance into the personal trading plan. We make sure that our future forecast for the remaining 12 months is tied to our actual run rate. And then we see what our income is. And if it's not sufficient, we make some adjustments.
And then I do have to add, it's not happening as frequently as it was happening even just a month or so ago. But options futures move the way they're supposed to. If it moves up a point on NQ, you're going to have a $20 profit. There's no question. It's not a gray area. We were seeing options pricing move in the direction of the position that we opened, but we weren't gaining a profit, or at least not the type of profit we should have seen. So that's the other benefit of futures, is if it moves in your direction, you're going to have a profit. You don't have to worry about volatility falling out, or time value decay all of a sudden changing how it wants to behave that day. You're guaranteed that profit.
That's a good point, Aaron. Thank you.
Timothy's asking, how are you tracking each trade in the live trading room?
Well, Tim, if you've looked at the end of day review that I do, it's very simply in this spreadsheet tool that Aaron created for us. And as each trade presents itself, I'm recording it in the spreadsheet. So I'm tracking these live, and that's how I'm able to differentiate between 5 points of profit in a trade, or 10 points of profit, or maybe 13.5 of loss. I'm seeing in real time what's going on. So I'm recording that, and if I step away for a while and miss a few trades, then we have everything that would be presented to us as a possible trade entry set up with an alert on TradingView. And so I can go back and I can review my alert log and see whether or not that trade signal came on too late. So for example, this T plus trade signal came on at 19:15 and 4 seconds. Well, it sounds like we're splitting hairs, but we have a 3-second cutoff generally for our signals. So that wouldn't be a signal that I'm going to record. So I can take it right off of the alerts log if I step away, but most of the day I am monitoring the signals, looking at them, and I am recording the real-time action of that signal, whether it be a win or a loss. And if you hear me, Tim, and I know you've heard me say this quite a bit, hey, here's a situation where the signal looks like it might be weakening. You might want to adjust your stop. You might want to pull your stop in tighter. There's a fractal that's only 12 points off of the entry of the position, as opposed to leaving yourself exposed to 20 points of risk. So it's those types of things that I'm constantly evaluating with Michael's help to feel as though I have the most accurate reporting of these statistics as possible.
Kenneth is asking if you could show what a short consensus signal is.
A short consensus, okay? A short consensus is going to be a red vertical bar. It's going to have a red downward pointing arrow with a C in the middle of it. A short consensus will only appear if the price bar is white or red. A short consensus will not print if the price bar is blue. If the price bar is blue and the conditions exist for a short consensus, that's a counter trend signal, and we don't print counter trend signals. In the settings for the adaptive entry system, you can decide to do that differently. In the settings right here where it says allow counter trend consensus signals, I do not have mine checked. I prefer not to take counter trend consensus signals. I only want to take the ones that are aligning with a neutral price bar or a directional aligned price bar.
Fergal's asking, is it possible to enter trades as you follow the OMM trading room, or do you have to sign up with New Cycle Trading Room as well?
So Fergal, there's no trading room for New Cycle Trading. We are the trading room, the live trading room here at Options Moneymaker, and we have a relationship with New Cycle Trading that their clients come into the trading room. Now, there is subscription to the adaptive entry system that New Cycle Trading offers and sells. And if you're not ready to make that commitment to subscribing to the software, you can spend your day in the trading room, in the live trading room, and Michael has his screen showing, and you can see the NQ, NASDAQ 100, ES, which is the S&P 500 futures, and RTY, which is the Russell 2000 futures. You can see those charts. You can trade along with those charts, ask us questions, you can listen to the commentary, and in addition to the charts and the education we provide, Michael provides a lot of commentary on where we are in terms of a wave count, where we are in terms of a fib retracement, where there is a potential or a must-get-to price point, which can have a dramatic impact on people's ability to take a valid AES signal and hold the trade longer than you might have, just simply because he's got a price target that says we need to get to that price point. So you can look over our shoulder, literally, and follow along until you're ready to get your own subscription to the Adaptive Entry System charts.
Paul's asking, what if trades are placed only based on consensus signals?
So we do have that category. It is part of our research group, but based on what we have so far, 9:30 to 4 consensus signals only is averaging about 24.5 points a day, 7 losing days. But again, we're in a state of research on these, so I don't have as much confidence yet in these numbers as I do in the ones that I think are well established, and we're just continuing to add more data to it.
I was asking if you can get the template for the Profit Sweet Spot intraday options trade. If you have purchased the Profit Sweet Spot matrix, it's available. If you go all the way to the left of all the tabs, you will see on there the template for intraday options. It's highlighted in a light blue color.
Mark's asking, on daily crosses, I feel like I'm missing some little nuance. It seems I'm always getting in the wrong side of the trend. Example, buying a put at the bottom of a trend or a call at the top of the trend and never showing profit in the position.
So, Mark, on daily crosses, it should be pretty straightforward. We're only buying calls when the Cycle Finder Plus crosses up, and we're only buying puts when Cycle Finder Plus is crossing down. Now, I know you were doing some of your own research on the PSSM. So if you're talking about some stocks that you've done some research on, I'm not familiar with anything outside of our watch list of stocks, but it really is pretty straightforward. If you're talking about SPX, there are trades that reverse on us. There are trades where you might have a downward cross on the Cycle Finder Plus on the daily chart, and we would be buying to open a put, and perhaps the SPX reverses and moves higher. But we would hold that position until Cycle Finder Plus crosses back up at the open of a day, of a new day. We're not going to take the trade off midday. So I hope that answers your question. If not, let's try again.
I would also evaluate when you're getting into the trade. If you have to work the order for a while and we've already moved the majority of the sweet spot, that might be a trade that if you get into, you're looking for less of a profit and you're evaluating the position once it hits the sweet spot based on the open of the bar. I look to get in as quickly as possible. I know I've gone through this before where I put the limit order above the mark, so I'm almost guaranteed. I'm not going in at the market, but I'm putting it above the mark, so I'm almost guaranteed to get in as soon as I place my order. And that's to prevent the stock or index from moving its sweet spot before I can get in.
Paul's asking, I'm in the live trading room program. Do I have access to the Profit Sweet Spot template?
It's not included with the live trading room. It's a separate purchase. It's a one-time purchase to get the data through the most recent update that started back in January of 2019. So that's a one-time purchase, and then within that, as Aaron mentioned, there is a template that you could do research on your own stocks, but it starts out with our watch list of stocks. I think we have 6 stocks and indexes that are part of the PSSM.
Back to Arizona's question real quick. The other thing that you want to make sure is that you're picking an expiration that's far enough out. So if you are holding the position a couple days, you're not subjecting your position to time value decay. So I tend to build a minimum of 2 weeks into my positions. And I generally am looking at a monthly expiration because the volume and open interest is higher on those strikes on a monthly expiration. Now in SPX, you could look at weekly expirations. Again, just take a look at the volume and open interest. But I always want to make sure that there's ample amount of time between today and the expiration so that if I do have to hold it for a few days, I'm not just watching the time value slip out of it.
Bruce is asking, is there any possibility of teaching an Elliott wave and fib retracement class in the near future? So we're always looking for the things that people want to learn, Bruce. And if there is enough interest, we are happy to consider putting together some sort of a class. I will say, though, that with Elliott wave and fib retracement, one of the reasons that the live trading room benefits so much from that information is because Michael has an extensive, deep level of knowledge about it. It's like second nature to him. And I think, I mean, Michael, you can weigh in if you have different thoughts, but I think that Elliott wave and fib retracement starts to get into an area of, it really requires much more advanced thinking in terms of what's happening with the patterns and price movements and the cycles. It just requires some level of experience. Michael's got a tremendous amount of experience. So we might be able to, at some point, put together kind of a preliminary, basic, high-level overview class. But the best way to benefit from it, Bruce, is in the live trading room. And Michael's just so good about identifying where we are in a particular wave count and which wave is the strongest wave. And that helps him identify for us where we might be headed. It's kind of funny, we joke a little bit about this, where I will ask him, is that a we have to get their price? And he'll say yes or no. If it's a we have to get their price, he's so frequently correct in that I will alter my profit target on a trade headed in that direction because I have high confidence that we might get there. So today, for example, I was taking 5 points of profit, 5 points of profit. Every once in a while, the movement would get me to 10 points of profit just because of the way the market was moving. Michael had identified a lower target. We had a signal to go short. I widened my profit target to 20 points. I locked in 5, 10, 15 along the way and hit 20 points. I would never have locked in that 20 points, or I would never have adjusted to 20 points as my profit target if I didn't have that confidence in the information that Michael was providing to the room. So simple answer, Bruce, is we might be able to do that at some point, but we don't currently have it on our radar, but I'll give it some thought. TJ, are you asking for futures broker? If it's a futures broker you're interested in, we use Infinity Futures. All right, I don't see any other questions out here for us. Aaron, do you have any other thoughts or questions?
I do not.
Michael, any words of wisdom?
No, just it broke that high,
Did
230
it?
today.
Did it really?
Had to. I think it break it that quick, but it did.
Well, it's amazing.
So there you go.
Um, Michael, I'm not really concerned about the Elliott wave and Fibonacci class. It's more because you're the knowledge expert, you're going to have to teach it, and we need the Southern Speak translation of it. So that's where you should start working on probably.
Okay. No comment.
All right.
TJ's asking, is after work trading worthwhile? I'll give you my 2 cents and Mark can plug in. From 6 p.m. to 4 a.m., no, it ain't worth it. From 4 a.m. on, it's okay for me. It's just too radical, it's too violent, and you don't have a lot of volume. And I mean, it's just I mean, an example. Okay, right now there's a trade that there's a movement that's it's a 60 tick bar, which is pretty large for the aftermarket. If you look at a chart, it's just really, really back and forth. I mean, it's just not my cup of tea between aftermarket. Between 4 o'clock close, and I'd rather start at 4 a.m. because that's when the European market opens up, and you get good volume. There's no volume right now. Very radical.
Yeah, that's why I started all my tracking with AES
Yes, that's right.
at 3 o'clock in the morning.
That's right.
I haven't done any research on the 6 p.m. to 3 a.m. time period.
Just an example. I'm just making this up now. So if you're trading 1 to 10, say you get in at 1, it'll jump to 10. You won't even see it jump to 10. It'll go right back to 1 again. It's just very. I just don't like it because you'll get. Just doesn't work for me because of that. I mean, I've been watching it just right now. I mean, it's just they're just the price is just gaps. So, no, that's just my opinion.
I agree with you on that.
If it was worth it, I wouldn't be talking right now. I'd be trading. So, just yeah. But that's Eastern time. That's right. 4 a.m. Eastern time is when the European markets opens up. It really gets really juicy around 7 o'clock. Mark's right. I mean, that's when he starts tracking. It really starts moving really nice between it. You can get some decent fills and some nice movement.
Paul is saying, based on what you stated, if trades are not placed only on C signals, what other signals? Any of the adaptive entry system signals. If you're going to trade options, you should probably steer mostly towards the trend signals, where it's the beginning of a new trend. The other signals generally have somewhat of a shorter lifespan to them. But here's a trend signal that started at 3:40 this afternoon, and it actually didn't end until 6 o'clock. Now that's not a great example because we transitioned over that close period, but here's one that started at 1:05 and it ran all the way through 2:30. So if you're going to trade on options off of the NQ signals, I would lean mostly towards the trend bias signals.
Bruce, I appreciate that. And I think Mark and Aaron both. I mean, we do it because Mark owns a business and he has to make a profit. And I get that, but deep down inside, we all like to help each other. And so, Bruce, your comment really gives me cold chills because he said, "Thank you so much. This has been life-altering opportunity, and I'm glad I'm a part of it, Bruce." But I appreciate that, and I know Mark does too, and Aaron does too. We take it very serious. At least I know we do. So thank you.
Good to see you here, Bruce.
Thanks, Bruce.
Glad to see you.
You answered his last Paul.
I did. Yes.
Okay, I'm making sure. Okay.
Okay, folks, we're going to go ahead and close out. I don't see any other comments or questions. We do sincerely appreciate all of you being part of our community. We each enjoy trading. We also enjoy creating tools that are going to help you build your trading business. I personally, for me, it's very personal that I'm excited about the combination of the adaptive entry system and the personal trading plan. Just those two things, if you follow the discipline of the signals in AES, and at the end of every day, you plug your performance into your trading plan, and you allow your trading plan to forecast for you what your income could potentially be over the next 12 months. That is a very powerful statement for you. Other than that, without that, you're kind of floundering. You don't really know where you're headed. Am I making money? You know, it's the Alice in Wonderland. If you don't really know where you want to go, it doesn't really matter where you go. This is all about saying, listen, I know that I'm losing on some days and I'm winning on more days than that, and my overall average is X. So I'm going to put together a forecast for a 12-month period based on that particular performance run rate. And then you can manipulate, and I won't get into teaching right now the personal trading plan, but you can manipulate what that future income is by capping the maximum number of contracts at whatever you're comfortable with. It's always going to be limited to be no more than 10% of the balance of your account. So it's relatively conservative to begin with, but we use a conservative forecast purely to demonstrate how to use this tool, how to go through this process, and how to view what your income could be. You know, somebody might decide that they want to, not 85, but somebody might want to put in 5 contracts as their max, and it dramatically changes the potential of your income. This is not pie in the sky. This is simple mathematics. It's the compounding of your profits on a daily basis. It's calculating in losses that are going to occur. You know, we're through 7.5 weeks, and we've had 6 days in 7.5 weeks that are losing days. That's right in line with what we planned for. So we're going to continue to plan that for the next 12 months. But you know, you can change the number of contracts higher or lower. 2 contracts gives you $272,000 income at this run rate. And the reason you can start with $5,000 and potentially make $272,000 is because you're constantly recycling the same capital. If today I made $500 on the capital that I have in my account, tomorrow I can make another $500, but I have not increased the capital in my account. I'm actually not increasing my risk. Until I get to a point where I've got enough capital in my account, I might go from 1 contract to 2 contracts. But the trading plan calculates that for you based on a few basic settings and parameters that you put in. So I'm very excited about this. I hear from clients all the time about they're using their trading plan and they're excited about what their income potential is from their trading business. And as Michael alluded to, that's what really gives all of us a level of satisfaction, is that we'd love to help all of you build a trading business and be excited about what you're doing. So we're going to go ahead and close out. Appreciate you being here. Michael, Aaron, thank you. I always appreciate what you guys do. And we'll be back to trading tomorrow morning at 8:45.